We all know about what the Chinese markets have done so far this year. The MSCI China Index down about 60% since that February 2021 peak. And of course, there's been a number of steps. Last week was a fairly good one in retrospect and in basically in comparison to the rest of the short year already. It was the first weekly gain for the MSCI China Index so far this year. So they're trying to put a floor. Now, this latest step that you just mentioned, again, Chinese regulators, as you know, they've never really been too kind towards short selling anyway. But right now, what we saw in October, essentially, limits were put on the lending of shares that executives and other strategic investors, or employees, I should say, get in what are called strategic placements, and other curbs were put in place. Now, the CSRC, the securities regulator, essentially in their statement over the weekend, essentially said that these particular stocks that were lent by strategic investors, they've dropped about 40%, according to the CSRC. So now what China has done is they're essentially halting the lending of these particular certain shares for short selling. As of today, strategic investors won't be allowed to lend out those shares as well during this agreed upon lock-up period. So again, it's just another step to try to put a floor on the falling stock market, restore confidence, and we'll have to see how well it works. As Paul alluded to, some of these steps seem to be petering out towards the end of the week.